I went into ChatGPT and I said, what would be considered the smartest way to invest $1 million? What if you had a large lump sum of capital? Let's say you came into $1 million. How is it possible that people that hit the lottery go broke a few years later? How is that the norm? Well, we're going to talk about lump sum investing, buy fast, sell slow, what some of these concepts mean. But before we get into that, make sure that you click that subscribe, hit that bell to be notified about the next video, and you get as much education as you possibly can. So I said, what if you had $1 million? Well, what would you invest $1 million in? Real estate is something that constantly can have upkeep. And so people don't realize that buying a house, well, you've got repairs, you've got property taxes, you've got this and that. Whereas if I buy a stock, I don't have any more upkeep. I don't have to keep putting more and more money into that stock. In fact, that stock only just pays me out. It pays me dividends and so on and so forth. I don't have to keep pushing more capital at the situation. And so I think where a lot of people get into problems is they think, well, I'll just take this lump sum, I'll put it in real estate. They don't realize the ongoing cost and upkeep and potential headache. So we, of course, are not against real estate. I own some real estate. I have properties, but I have to manage those. I've got renters in there. They send me my Venmo for rents and different things like that. If I don't get that, well, then there's a problem. I still have payments that need to be made, but the rent's not coming in. With stocks, it's much more clear and simple. You put money into stocks, the stock price can go up, it can go down, it can go sideways, but there's not more capital and there's not the big headaches involved, generally speaking. So I am a fan of stocks, of course, and the most popular method would be the 60-40 rule. 60-40 has been popular for decades, and the 60-40 is basically put 60% of your money in stocks, 40% in bonds, and let that grow. But ultimately, there's just not a lot to do with that. Now, I have lived by a rule that's a whole lot more in stocks and a whole lot less than 40% of my capital in bonds, and that has served me extremely well. But I know how to manage that. So do I have more of my allocation to stocks? You bet I do. Do I have, speaking of which, more than $1 million in stocks and I'm perfectly comfortable with that? You bet I do. And it's not something that keeps me up at night and keeps me concerned and worried. It is the way I want to live my life. Having said that, I want to buy great assets at great prices, and I do want to have some alternative asset classes. So I went into ChatGPT and I said, what would be considered the smartest way to invest $1 million? And they said, smart allocation strategy, diversified portfolio, 400,000 in stocks and equities. It talked about the total stock market ETF. It talked about some international stocks, some dividend stocks. Then it said you could put 20% or $200,000 in bonds. And it referenced U.S. Treasury bonds, municipal bonds, short-term bonds, CDs, etc. It said you could put 15% in real estate, REITs, or crowdfunding type of area. It said 100,000 or 10% of your money maybe in commodities, gold, commodities, crypto. It said maybe 10% or $100,000 in cash, an emergency opportunity fund. And then finally, 5% or $50,000 for yourself and for your personal growth. I actually was really impressed with this answer. Education, coaching, skills, entrepreneurship. This could generate exponential long-term ROI. And this came from ChatGPT. And I love that last comment by them. Could generate exponential long-term ROI. It has so much more potential. And so this is why the Warren Buffetts of the world say the best investment you can ever make is in yourself. It has exponential possibilities. But I didn't mind some of the other allocation ideas, some alternative asset classes. Now, it's probably not a good idea to load 80% of your money in gold, for example, or some of these other alternative asset classes, but to have some percentage in there makes sense. I own some of the precious metal space. I own some commodities. I own a little bit in bonds, and like I said, a whole lot in stock. In addition to that, I utilize options for income stream purposes. What we love to do at the Cashflow Academy, as the name suggests, is stack cash flow. So I want to have covered call income, sell a put to own the stock, get the dividend, all things that can be done to enhance and to further your yield and to further your performance. Ultimately, if you were to have $1 million, these would be smart strategies. And so some people say, well, I don't have $1 million, so none of this applies. And I would say, don't be so short-sighted. The only way you're going to get to $1 million is by working with what you have now. Invest in yourself, in your education. Visit us at the Cashflow Academy. What capital you have, get it working for you. Start that process of compounding, because it's amazing how $1,000 can become 10 and $10,000 can become 100, and then $100,000 becomes millions. I've seen it happen. I've seen it work in my own life. I know with perfect mathematical science that as you generate positive returns and you give that money time to grow, it will turn into larger sums of capital. How much capital? Well, that's dependent on how good your return is, how much capital you start with, and how long you give it to work. You can go to any compounding interest calculator and do those numbers for yourself. So even if you're not at that point where you say, well, I don't have $1 million yet, work with what you have and get it started. Get it building a better and brighter financial future for yourself and for your family. Visit us at the Cashflow Academy. Hit that subscribe button. We love you. We appreciate you, and we'll see you in the next video.